Welcome to Bunnex Investment Group. By the end of this video, you will be able to catch entries like this, and you will also be able to get a free custom indicator which I'll provide you for MT4 as well as mobile. Stick, relax, and have somewhere to take some notes. Firstly, we need to highlight the underlying principles of any strategy before we talk about it. So basically, the TDI or Traders Dynamic Index is one of those indicators we talk a lot about on this channel because it works. In this strategy, we utilize the overshooting effect of the indicator when market makers induce traders to take the opposite side. So we understand that market makers require our opposite orders so that theirs can be filled and that they can actually make money. So if they want to go to the upside, they'll need you to actually go to the downside, and vice versa is true. This leads them to induce traders in a direction opposite to the one they intend to take, and the inducement leaves a traceable path. We can actually see that at this particular point they made an inducement. So how do we see this inducement? Let's continue. Firstly, we need to understand the TDI indicator. So these are the components of this particular indicator. It is 4 indicators incorporated together. These are a Bollinger Bands and 3 EMAs. So the volatility bands are actually the ones in blue, which are these ones, and the RSI line is the one in green, which is this one, and then the signal line is the one in red, which is a moving average, as well as the moving 50 in yellow, which is actually a demarcation of the upper band and the lower bands of the indicator. But the most important one is the relative strength index line, or the RSI line, which we will talk mostly about. So the RSI effect, when the RSI line is within the volatility bands, when it is within, like in this case, it's within the volatility bands, always know that this is a no man's land. Within that, you can be trapped. Market makers can do anything that they want. So induction is seen when the RSI line peers out of the bands and go back inside the volatility bands again. So if they actually do something like this, when they went outside the bands and then when they went inside the bands, you know that in this case short traders have been trapped, and in this case the real boys or the big fish are now within or getting into the markets. So this is a sign that market makers have injected and closed their entries in a fast manner. Market makers have a portion that they dedicate to trapping or to moving charts so that you are trapped, so that the other bigger portion or the other bigger chunk can be filled. So let's say they have 10,000, they can use 2,000 lots to actually induce you move the markets in this particular direction, and then the other 8,000 will be injected whilst you have been trapped. So a squeeze of the TDI before this happens is a great confirmation of inducement, meaning that you can see in this case the volatility bands are actually going towards each other, squeezing, and you can see expansion that was actually issued here. So a squeeze before this inducement is actually a great sign or a great confirmation of inducement. So when the RSI line is within the volatility bands, always know that this is a no man's land, and the induction is seen when RSI goes outside the bands. This is a sign where market makers have injected and closed their positions in a very fast manner. However, we need to know the induction, the rightful trend, and here is how to determine it. For us to get the right side of inducement, we need an idea of where the trend is going. This can be simplified by using EMAs, and the 50-200 EMA can give us a good trend bias, and will also give us confluence to our entries. We need a crossover of the two, which are the 50 and 200 on the previous day. Then look for inducement in line with the trend on the current day. Let's have an illustration for that. In this case, we can see that there was a crossover of the 200 EMA at this particular point, 200 in white, 50 in blue, and then we can see a squeeze, as we have said, a squeeze that was issued. We can see this was actually an inducement or a shark fin, but it was outside our scope of trend. That is why we said we need a trend. So on this particular side, we had the right one on the right side of the trend. Therefore, at this point, this is where we actually wanted to make our entry. So before we see examples, please note that we have a free Telegram channel where we share free signals, free setups, and trading advice. I'll also post this indicator there as well for MT4 and mobile. Be sure to be part of that community. I'll leave the link in the description box below. So this is USD against Swiss franc, and we are going to use this particular one as an example. So in this particular case, we can see the first step is to see trend. Trend is down because we have seen 50 crossing 200 in this downward side. This was Wednesday. We've said on Thursday we look on the previous day. The previous day is where the crossover occurred, and here we can see the shark fin that was issued and a confluence of the retest of the 200 EMA. A 2-to-1 reward to risk ratio was going to be satisfied with this particular arrangement. Going forth, we can start to look again for an entry. You can see a crossover here, but unfortunately there was no there was actually this retest, and there was a shark fin at this particular point. Maybe we could say it was going to end up as a loss, right? Then going forth, we can see another crossover, a shark fin, and a confluence on the 200 EMA, and the market went our way. Then going ahead, we can see another crossover that occurred here, a squeeze, a beautiful squeeze, and then a squeeze, and then a shark fin that was issued. And then on the charts, we can see that shark fin worked out perfectly. So these are the steps that you'll be following, and for each and every strategy to work, you need to be consistent. Have a substantial number for your sample size so that you can actually see profitability within your trading. On that note, we've come to the end of our today's video. I'll see you again in the next one.